Welcome back in, investors. So we're waiting on Palantir's earnings. I know this is a popular stock within the YouTube community. And so I got the news thread up and I'm expecting them to drop here in the next few minutes. It's already traded as high as $8.06 and as low as $7.04, starting to find some middle ground at $7.40. GAAP net income came in at $31 million. That's their first positive quarter of net income. So the stock is absolutely skyrocketing off of that. GAAP earnings per share came in at 1 cent. Adjusted earnings per share came in at 4 cents. And total revenue grew 18% year over year. Now, while this is skyrocketing, I want people to understand that the expectation for this company was to grow over 25% revenue. On my analysis, I actually had them growing at 24%. So this is a pretty substantial miss on the growth side of things. I think the market's just reacting to the fact that it's their first quarter of positive earnings, which is pretty great. But when we factor in that 4 cents a share in the growth rate on this company, it's not that great, guys. So let's just we're going to take it line by line here. Now, this is a company I do find interesting, and I just think it's extremely expensive, and I'm starting to think it's even more expensive now with the recent rally here into top line revenue here, 432 versus 508. Obviously, that's some nice growth here. And then when we bring it down to gross profits of 345 versus 404, a substantial jump in sales and marketing. So they're spending a lot more on marketing here. And when we bring it down, they did lose $17 million, nearly $18 million for the quarter, which is substantially better to what they did last year. So when we look at what they're making from operations, it's still in the negative. So where did the positive come from? We're actually getting positive nearly $45 million on other income, as far as getting a positive net income of $33.4 million. So I would say that, yeah, it looks like they are heading in the right direction, right? But when we look at operating income, it's still negative here. So I just want to highlight that this company is still losing money. So we can see here that they had 2,063,000,000 shares, and now they have 2,090,000,000 shares. So we have to factor in that there is still diluting taking place. Cash and cash equivalents jumped up, and accounts receivable, substantial growth there as well. So net loss in the company, as we can see here, when we look at it from a full year view, net loss in the company is coming down. They lost $371 million in the full year. Stock-based compensation is coming down, and that's been definitely one of the topics of conversation and concern. So that's also good to see. You want to keep seeing that. Both of those trending in the right direction. Loss from operation was $17.8 million. They add back in $129 million of stock-based compensation, employer payroll taxes to related stock-based compensation, and they get $114 million of adjusted income from operations. And one last thing we want to talk about here, Palantir is actually guiding down for the full year of 2023. Margins coming in at 24%. So we're going to do EBITDA margins at 24%. Use 24% as EBITDA margins going forward, and then we're going to get them at $2.2 billion in revenue by 2023. So as you guys can see here, I had them doing $2.3 billion in revenue. So we're going to guide this down slightly. They grew their cash position by $2.6 billion, so we'll update that as well. So guys, I would be very cautious on this one here, as with the amount of shares outstanding and putting a pretty high multiple on this stock. I'm still getting right around that $6 to $7 mark on Palantir here, as earnings are now guiding down. We're going from 2.3 projected revenue. We're going from $2.3 billion of projected revenue in 2023, bringing that down to $2.2 billion of projected revenue in 2023. We're seeing the EBITDA margins come down substantially from 2021 to 2022. We're seeing the full year adjusted earnings per share coming down, and the company is guiding down for full year 2023. I just don't think it's that impressive, guys. So unfortunately, I'm not super impressed with this earnings report. Now, they're doing a great job on top line revenue growth of roughly 20%. But as we stated before, this was a company where we were projecting out 25+% revenue growth. And that's not coming in. Not only is that not coming in, but we're also getting margin compression here. Adjusted operating margins are coming down. Adjusted free cash flow is coming down. Adjusted EBITDA margins are coming down. So I would definitely say this is kind of a mixed report. And when I run my analysis, it's still coming out to about a $6 stock. And I'm sure some of you are probably going to be upset about that. But guys, I'm just running the numbers of exactly what they're telling us. Margins are coming down. Yes, they're still growing top line pretty strong, but not as strong as we originally projected. So we have to adjust for that. We have to adjust for the margins. So we see here that the stock is pushing over $9. We see over here that the stock's pushing over $9 a share, which means to me that this is now 50% overvalued from where I would like to get it, from where personally I would like to get in on the stock. So now the question becomes, am I missing something, or are people possibly overreacting here? So, while the company overall is heading in the right direction, I tend to think that there's some question marks with this earnings. And, for me, I think this is an overreaction to the market. I could be completely wrong here. There could be something I'm missing. There's probably could be something on the earnings call. But overall, I would say that this is... So let me explain why I think this is becoming an expensive stock at $9. Number one is going to be that the growth rates are slowing. They're not growing over 25%. They're probably going to grow right around 20 to 15% over the next few years. So you have to adjust for that. Number two, obviously, we see the margin compression taking place. And number three is the multiple we're putting on this stock is fairly elevated. So with those three things in there, I tend to think that this is a dangerous one to be jumping into, especially if it gets over $9 a share. Just my opinion, guys. As always, I shoot it straight. I'm not trying to be bullish or bearish. I just try to be open-minded. This is a company that I'm very interested in. I definitely want to see the growth rates higher. You want to see margin expansion, which is something that they've talked about substantially. And we're actually seeing the opposite. We're seeing growth slow, margins compress, and the stock is exploding on that. So I find that pretty interesting, and we'll see where the stock settles over the next few months. As always, guys, appreciate your time. Thank you so much for spending it with me, and we will see you in the next one. Peace.